debt capital for private limited company. So, private limited company, lots of people come to me and ask about what are the debt funding options for private limited company. Normally, they are only aware of either taking money from the shareholders, either taking money from the directors, or by the loans. But I would want to tell them that there are lots of other options available in the debt form of capital funding. So let us discuss in detail. So when I say debt capital, it means debt and not capital, definitely. So it's just a terminology which I'm using. So first form of debt can be by way of shareholder loans. So the shareholders can give loans to the company. Definitely there are restrictions in terms of the maximum allowed limit which can be taken from the shareholders, which is paid up capital and free reserves, 100% of paid up capital and free reserves. The second funding option is loans from directors, relative of directors. In relative, near relatives of the directors are only included, that is parents, spouse, children's and siblings. The third form in loan from directors and relative of directors, there is no limit in terms of what amount they can be raised through this option. So any amount of money can be given by the directors or their relatives to the company. In terms of loans from directors, you have to understand that they cannot raise a loan elsewhere in personal capacity and give the loans to the company. The loans given by directors and relative directors has to be by way of 100% self-financing and not supported by back-end loan. The third option available for debt funding to private limited companies is normal bank funding options where you take loans from banks by way of CC, OD, term loans, loan against properties, etc. These are normally secured form of funding which a private limited company takes from bank. After that, there are other options available which is called as intercorporate loans and advances. Lots of company comes to us and ask, we cannot take funds from individuals, we are restricted, you cannot go to people and take money. I tell them that, private limited company has a process of taking money from elsewhere. The most unutilized form of debt funding is intercorporate loans and advances from other private limited companies or other limited companies. These options are normally not utilized by the companies. I don't know why they have not been very prevalent, but definitely they can consider these options when it comes to debt funding. They can so say a company with a highly so say for a company with a high liquidity can definitely support the company with low liquidity with intercorporate loans and advances. You definitely need to reach out to a professional to understand more in detail about this. So these were a few forms of debt funding options available to a private limited company. The third type is very important in terms of funding and has not been talked much about, and I don't know if many people know of it. First of which is factoring. So there are factoring companies out there which helps you in your funding requirement. Factoring company normally gives you an advance against your invoices which are raised. The time period for funding is the tenure of your payment term. So say for example, if you have a payment term of 45 days, in that case the factoring company will help you with the funding for 45 days against the invoice which has been raised. In this case, you will need to open up a escrow account where the money received from the client is deposited first and the factoring company adjusts their interest or commission and pay back the other remainder to you if there is any. So this is a very good option which has not been explored by many people. You should definitely reach out to the company who is into factoring business to know more about this. I think you will definitely unlock lots of value from your own outstanding invoices. The factoring company needs you to make the payment in case if the customer fails to make the payment as on the due date. The second unutilized form of access to fund is by way of bills of exchange. The banks normally help their customers with bills of exchange. In case if you have an arrangement with your customer, definitely bank would validate your standing and the customer's standing and allow you bills of exchange facility where the funds are paid to you outright upon deposit of bills of exchange to the banker. and you get an early access to the funds even when you have an outstanding from the customers. The bank charges commission on the same. You will need to reach out to the banker and ask about this option. I think the combination of all the earlier discussions, if you take or if you plan it well, a good capital structure will help you to reduce your financial cost, and a better mix of all this will help you to get access to the funds which other companies are not getting access as of date. So reach out to us if you want to know more about it. We will definitely be able to answer your queries. We have our email address listed here.